When I was looking to invest into energy companies for dividends, there were so many companies out there that I got overwhelmed. But when you split them up into different categories, it's much more manageable. Oil and gas company splits their operation into 3 categories: upstream, midstream, and downstream. Upstream involves the oil and gas exploration and production aspect. Midstream focuses on the transportation and storage, and downstream deals with the refining and distribution. Last time I took a look at companies that focuses mainly on the midstream aspect, which transports and stores oil and gas. If you want to take a look at that video, I'll link it in the description box below. Today I want to focus on the integrated oil and gas companies. An integrated oil and gas company is a company that engages not in just the exploration and production aspect, but also in the refinement and distribution of oil and gas. So they focus on both the upstream and downstream aspects. Unfortunately, I'll only be looking at 3 companies today. I wish there was a couple more. When I'm doing my research, sometimes I overlook a company. If I ever miss a company, please let me know in the description box below so I can include it next time when I do an update. Suncor Energy is the largest of the 3. They acquired Petro-Canada in 2009, which I'm sure many of you have seen their gas stations across Canada. Just a little fact, Petro-Canada started out as a crown corporation. Second largest is Imperial Oil. ExxonMobil owns just under 70% of Imperial Oil, and therefore Imperial Oil uses ExxonMobil's company brand, Esso and Mobil, for their gas station, but almost all of their gas stations are operated by third parties and not the company itself. And lastly is Husky Energy, which also owns and operates Husky gas station, which I'm sure you have seen across Canada, but they also operate the Mohawk gas station, which they acquired in 1998. An interesting fact about Husky is that Lee Ka-sing, the richest man in Hong Kong, and his investment firm owns about 70% of Husky. First, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. When we take a look at the numbers of each company, one thing I want you to know is that the payout ratio fluctuates a lot because of the profits are not consistent. Since they are tied to the price of oil, as oil prices go up, they perform better. When oil prices are low, not so much. So keep that in mind. Overall, we can see that Suncor is priced the highest and Husky the lowest. We can see this from the PE ratio, the price to book, and sales ratio. Another thing you should notice is that Husky has the most debt compared to their size. When looking at their dividend, Suncor has the highest yield and has been growing their dividend very nicely over the past decade. But they have been paying most of their profits back to their shareholders as well in the past decade. Imperial Oil has an okay yield. They also been growing their dividend slowly but steadily, and their payout ratio is much lower, even in the past, so this leaves them with room to still grow their dividend. Husky Energy, on the other hand, may look great with a good yield and a low payout ratio, but that's gotta be a catch, right? And there is. Husky has cut and even stopped their dividend payment in the past several years, hence why the payout ratio is on the lower side, and the stock performance has been very poor as well, hence the high yield, so I find it very risky. In the past 5 years, Husky has been really struggling, and the stock has reflected this as the stock has lost about 2/3 of its value. Imperial Oil has lost about 1/3 of its value in the past 5 years, where Suncor has remained flat. This was all during the period when oil prices collapsed from about $100 a barrel to around $30 a barrel, but since then, oil has recovered back to around $60 a barrel now. Just by looking at their annualized return, you can see that something must have happened around the 5-year mark. Just by looking at how poorly they have performed. You can see this throughout all the companies, but Suncor has held out alright and has recovered back to where it was. Husky, on the other hand, just can't seem to find a break and has been hovering around its lows. We can see this clearly on the chart. Suncor has outperformed the other two. Even though we see a big spike up in Imperial Oil, it's still hovering around its lows, but has performed better than Husky. When we take a look at the revenue, we see 2 spike down, one in 2009 and one in 2015, which corresponds to the drop in oil prices in 2008 and 2014, which is expected. Suncor and Imperial Oil has been able to recover from that and grow the revenues. Husky, on the other hand, hasn't been able to reach back up to their peak in 2008. When it comes to their profits, we can see that it really took a big hit in 2015, and it hurt much more than 2009. But overall, they haven't been able to grow their profits in the past decade. Besides the spike down in 2015, they've been just chopping around. Another thing you can't see clearly in their yearly profits is Suncor's acquisition of Petro-Canada in 2009, but you can see it clearly in their cash flow with their massive increase in cash flow. We also noticed a decent jump up in 2017 from Suncor as well, with their acquisition of the Canadian oil sands at the end of 2015 and Murphy Oil Corp's 5% stake in Syncrude's project in 2016. When we take a look at the profit margins, you'll notice that Imperial Oil's very consistent profit margin compared to Suncor and Husky, where Suncor and Husky pretty much mirrors each other. I am unsure of the exact reasoning why, but the main difference I noticed between them is that Suncor and Husky owns their gas station, where Imperial Oil's gas station are owned mostly by third parties. One reason why I don't like Husky is because of their dividend. They ramped up their dividend way too quickly and were unable to support it, and had to cut it back in 2009 after the oil crash, and then dropped it again in 2016 after the oil crashed again. And worst of all, stopped paying their dividend entirely and only just start paying it again recently. When we take a look at Suncor and Imperial Oil, they haven't had to cut their dividend payment and have been growing ever since. You may notice a spike up in Imperial Oil's 1994 dividend, but that's because they paid out a special dividend that year. But overall, when you take a look at Suncor and Imperial Oil's dividend growth over the years, it's been pretty impressive. Imperial Oil started off slowly but has been increasing their dividend growth very nicely in the recent years, where Suncor has been growing very impressive right from the start. Again with Husky, because they have stopped their dividend payment, it has made the numbers a little out of whack. But if we omit the outliers, we can see it more clearly. Just take a moment and take a look at Husky's dividend growth. The chart says it all. Again, Imperial Oil's dividend growth started off slowly, but they've been beginning to ramp it up, where Suncor started off very strong but has been slowing down in the recent couple years. But still growing at over 10% is still very good if you ask me. That's like receiving a 10% raise every year. You won't see me complaining. Overall, which one do I consider a buy? I view both Suncor and Imperial Oil both as a decent investment. I like Suncor's performance over the years the best, but their dividend payout ratio is a little bit high, and hence why they are slowing down with their dividend growth. Imperial Oil pays out a much smaller percentage of their profits and has much more room to grow their dividend in the future. And Imperial Oil is cheaper than Suncor. It trades at a much lower PE and the price to book ratio. And Husky is only for the people who can handle the risk. It's priced much cheaper and very risky, and the current dividend yield and payout ratio is very nice, but who knows if they can keep that up or not. If I were to take a position in Husky, it would be a very, very small position. A position where if it went to zero, it wouldn't make a difference to my portfolio. And as always, if you enjoyed the video, please like and share the video. It really helps out the channel. If you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you guys in the next video.